Let's talk about the B word today. Hi, I'm Jacqui Shaw, a finance consultant with the Community Business Bureau, and I'm going to briefly chat with you about budgeting processes. I'll start off here with my definition of what a budget is. A budget is basically a financial plan for a specified future period of time. So why are budgets important financial management tools for your and every organisation? Budgets are important as they help you control, track, monitor the financial performance of your organisation. They help you to plan and stay focused on your organisation's future activities and direction. Budgets help you to see if you can fund your upcoming commitments, and they can help you acquire finance. Having a budget assists you in making confident financial decisions. And budgets can help you identify trends and also identify problems before they occur, for example, cash flow difficulties. Now, what are some good budgeting requirements that you can follow? Firstly, your budget should reflect your strategic vision and mission. For example, if your budget shows a huge profit, but your mission is to have a social impact, it would be apparent that the budget doesn't seem to align well with your mission. Your organisational strategy will determine the activities you need to deliver to achieve your strategic objectives, and your budget is the costing of these activities. Your organisational strategy may also include targets for surplus and growth, and may also include the building of future reserves that your organisation may need. Timing. Now there's a few things here. Set the time frame that your budget will cover, along with how this will be broken down, for example, monthly, quarterly, annually, even multiple years, so that it aligns with your organisation's needs. Plan to ensure that your budget is approved and in place for the start of the time period that you're budgeting for. And allow enough preparation, consultation and thought time in the lead up to this, as your organisation's budget will pretty much never be completed on the first cut of the numbers. Give thought to the methodology calculation basis that you will employ to prepare your budget. For example, will you start with a blank slate from scratch, or say use the current year's projected actuals with a percentage increase as the starting point? But think about what the best way to tackle this is for your organisation. If there are significant activity and strategy changes from one year to the next, using projected actuals with a flat increase wouldn't be the most robust approach. And don't forget that not all revenue and expenditure increases at the same rate. Also give thought to what your known commitments are for the coming year. For example, which of your grants are partway through or coming to the end of their agreement? Other contractual or lease agreement arrangements? And there's also scheduled wage increases. Whatever way you decide to start the process, ensure you have sufficient and accurate revenue and expenditure line item categories. Think also about what other information you'd like to see when pulling your budget together. For example, it may be beneficial to have the current year's budget and projected actuals included for comparative analysis, or FTEs summarised on your wages worksheet. Importantly, ensure that your budget document details the basis of how each category line item amount has been calculated. Because I can guarantee you, in a couple of months' time, you probably won't remember specifically how all these numbers came about. And another bonus to this is that it makes the numbers transparent for all involved. A well-communicated budget helps those involved understand the priorities of your organisation. There are different types of budgets, but the more common ones I see being used are operating budgets, cash flow budgets, and capital expenditure budgets. Operating budgets relate to your organisation's operational activities. That is, all the different types and amounts of estimated revenue and expenditure that is required by your organisation to fulfil its ongoing day-to-day activities. A cash flow budget is an estimate of all the incoming and outgoing money to your organisation's bank accounts over the specified budget period. It is a useful tool that can help avoid short-term cash shortages, or at least allow you to plan or prepare for them. It can also help you if you need to schedule some irregular or necessary once-off expenditure. And capital budgets are about the evaluation of major projects or investments, and deals with the allocating of money for the acquisition or maintenance of fixed assets, such as land, buildings, motor vehicles or equipment. So once your budget or budgets have been approved by your board or management committee, you now have a clear financial direction on what you expect to occur and when. I bet right about now you are thinking of heaving a big sigh of relief after wrapping up your budget process. But hang on, that's not the whole end of the exercise. So what happens now? The next step is to use your budget as a monitoring tool. And this usually happens when your budget is entered into an accounting software package. The reporting in your accounting software should allow you to view your actual results against where your organisation thought it would be at that given time. By having detailed budget documents, you'll be able to work out what and why any actual variation has occurred. And by comparing and reviewing these if needed, allows you to make any necessary organisational adjustments to compensate, minimise risk, or perhaps enhance your activities. Besides the monitoring of your actual financial figures, your budget can also assist with projecting the future financial results of your organisation. By using a mix of what has already happened financially so far, that is historical data, along with the future remaining budget period, you are able to project an estimated future financial position for your organisation. Well, I'm pretty sure by now it's apparent why budgeting is such a very important business requirement if your organisation is to be financially on top of its game. So probably the final thought I'll leave you with here is that having budgets in place puts you in the financial driver's seat for your organisation. You have control of the financial reins, so to speak. It doesn't necessarily mean that it will always be a smooth road travelled, but as best as you could have, you've planned your trip and your organisation financially knows where it's headed. And believe me, that's less stress all round. I know there's a lot more we could discuss on all the intricacies of budgeting, but I think we'll leave it there for another time. I hope you've enjoyed our budget chat today. Oh, and by the way, if you have a few minutes, pop over and have a look at our resourcing and costs video, as you may find this helpful too. Bye for now.